China has found a powerful way to counter U.S. tariff pressure: gold. While China officially reported its gold reserves at 2,279 tons as of February 2025, a recent report from Money Metals Exchange suggests the real figure may be far higher, potentially over 5,000 tons, quietly accumulated by the People's Bank of China. This massive gold stockpiling isn't random. It's a calculated move to strengthen the yuan and reduce reliance on the US dollar. But why gold, and not other assets like bonds or foreign currencies? Because gold is real. It can't be printed out of thin air. Unlike fiat currencies, gold has intrinsic value, forged by scarcity, trust, and physical resilience. Throughout history, gold and silver have proven to be stable stores of value. In classical economic theory, they're often referred to as natural money. Their value isn't dictated by political whims or central bank policies, but by their very existence. This aligns closely with Islamic monetary traditions that use dinar, gold, and dirham, silver, as fair and stable means of exchange, grounded in intrinsic value, not in empty promises. Economists like Nobel laureate Robert Mundell, the father of the euro, have even claimed that gold is the only form of money that isn't dependent on governments and can ensure global stability. In this light, China's gold-buying spree isn't just defensive. It's strategic. It's a step toward a more just, multipolar monetary system, one that's less dominated by a single currency. And this is not new. For over 2 decades, China has been building up its gold reserves quietly but consistently. It began in 2001 with the establishment of the Shanghai Gold Exchange. Since then, China has tightly regulated gold trading and pushed domestic production to become the world's top gold producer by 2007. During the 2008 global financial crisis, while the West was reeling, China smiled silently. Its gold reserves jumped by 7.6% over 6 years. This was the beginning of its quiet detachment from the dollar and preparation for a globalized yuan. Between 2010 and 2015, China's central bank worked behind the scenes with state mining giants like China National Gold Group. They bought gold through domestic mines, secret offshore deals, and shadow trades in London and Zurich. In Africa and South America, Chinese companies acquired gold mines under the guise of infrastructure projects, funneling gold straight to hidden vaults in Shanghai and Beijing. These secret moves were confirmed indirectly through trade data. For instance, Swiss gold exports to China surged by 1,500 tons in just a few years, far exceeding China's official numbers. Analysts from the World Gold Council and Reuters estimate China's actual reserves could be 2 to 3 times higher than reported. Why the secrecy? National security. Revealing the true scale of their gold reserves could trigger global price surges and attract geopolitical attention from the US. Beijing prefers to act silently, like a chess player hiding their next move. Every hidden ton of gold is preparation for worst-case scenarios: currency wars, sanctions, or a dollar collapse. Even the IMF once questioned the transparency of China's reported gold data. In 2015, China started reporting monthly gold reserves. That's when the world realized the scale of what had just happened: a quiet accumulation of wealth unprecedented in modern history. Today, gold is no longer just a reserve. It's a message. China doesn't want to play by rules written by the West. As the US increases tariffs, especially since Donald Trump's return to power in 2025, China doubles down on gold. Every ounce is a shield against dollar risk, sanctions, or global inflation. They've learned from Russia. When Western countries froze Russian assets, it was gold that saved them. Since Trump's second term began, under the America First banner, the U.S. has imposed over 145 tariffs on Chinese goods. China responded not just with counter tariffs, but by deepening its financial defense. Last week, gold prices hit an all-time high, $3,500 per troy ounce. That's about $112,540 per kilogram, or over 1 billion rupiah. This isn't just a price spike, it's a signal of growing global uncertainty. And China is ready. Their gold reserves, both declared and hidden, are now a fortress. In a world shaken by inflation, war, and political instability, China isn't just surviving the storm. It's preparing to reshape the global economic order, one gold bar at a time.